Hi, welcome to the Market Alert for Thursday, the 18th of December 2014. Starting off with the 5-minute chart, we can see that we got more or less what was forecast in yesterday's Market Alert. We see the market finding support at 17,100, and then the market trading in between and up to the different psychological levels. Eventually, the Fed statement came out, and this just moved the market even further to the upside. Again, you can see in this price bar here, just following the announcement, how prices actually moved sharply by 138 points just in this one bar alone there. We then see prices retrace, coming back down towards the 17,200 level, before reversing, closing back above the 17,250, and then making its way back to finish on the highs. And then you can see the market there, more or less still in that position on the overnight market. And the reason for this move, as we spoke of yesterday in the daily chart, was the huge volume that we saw in Tuesday's price bar. This is a lot of volume. And then yesterday, of course, you see the reversal to the upside there. So in order to move higher, prices have got to close above all of these highs here, 17,404. So if you have any sort of weakness around 17,404 or 17,400, the psychological level, then you could expect to see some sort of profit taking at this level. In order for this market to move higher, it's got to take this out convincingly. And also all of the other highs to the left as well will need to be taken out as well, as these are going to be previous selling areas where the market moved lower. Also, if I just remove these extensions, as the market moves higher as well, I'm just going to place on some fib lines as well. The first will be from here to here, and there you can see the market already about to trade up to the 17,450 psychological level, 438 for the 76%. And the reason I'm using this is what I call a rolling fib, and once this area is taken out, or if it's taken out, then I'll move to this bar, to this bar, this bar, and this bar, drawing back down to the lows. And then eventually we end up with the one that most people would use from the high down to the low. But as the market's not anywhere near that at the moment, this is a technique that I've developed. I just call it a rolling fib, and all I do is just roll back to the previous bar's high as if it were the recent high, and that way I can see exactly where the resistance is in the market. So there's going to be some major resistance in this area should the market move higher. Plus we've also got the high of the pogo stick as well, which we need to see the market close above if prices are to move higher there. On the news front today, let's have a look at the US. Anything after 2:30? Yes, we've got the Philly Fed Manufacturing Index. This is out at 3 p.m. and just take a look at this for a forecast. The previous 40.8, today's forecast is 26.3. And I have to say, I wouldn't be surprised if we don't see a straight reversal off the news of yesterday, the market being held up at the moment. However, the only thing that sort of persuades me that we could see a bit of a rally back to the upside is the implied volatility, because this is already in the highs, but it still hasn't doubled. We haven't seen 20% yet in the implied volatility, which is what we would be looking for to put and confirm a bottom in place in the daily chart there. So again, it will be interesting to see how the market plays out the reaction to what the Fed was saying yesterday, which is basically that we must be patient on interest rates and they can stay at the same level as they are at the moment. But of course, brewing behind the scenes is the collapse of the ruble. The dollar has increased by 30%. So anybody that was short the dollar, and there was a lot of people that were short the US dollar, are now having to cover this position or are on margin calls as well. So it could be quite exciting over the next few weeks, and in particular the week after Christmas and New Year as well, which just to let you know, I shall still be here. I'm not going away because these are exciting times, and it's during those times when you can expect to see some of the decent moves as well. So just to let you know that next week is Christmas week, of course. I shall finish on Tuesday, but then return the following Monday for the week in between Christmas and New Year, just to keep you posted of events. You don't have to trade, but I'm just letting you know that I will be here, so if you get bored of the festivities, then the market alert will be available. Right, well, that's it from me for this morning. Say just brief and to the point. It's more or less what was forecast and expected in yesterday's market alert. See what happens today. And as ever, thanks for your support, very much appreciated. Thanks for watching, and I shall see you in the next one.